Something interesting is happening with SoFi right now, and most people aren't paying attention to it. While the market is filled with fear and hesitation, SoFi continues to show signs of quiet strength. There's a lot going on beneath the surface, from short sellers making subtle moves, to algorithmic trading influencing momentum, to institutions adjusting their positions. In this detailed breakdown, we'll explore exactly what's driving SoFi's latest action, what investors need to understand about short activity, and what could come next as we head into a new trading week. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. As of late in the trading session, SoFi was slightly green, up by just a fraction of a percent. While the move may seem small, it's what's happening behind that number that truly matters. The stock has been fluctuating between roughly the mid-$25 and upper $26 range throughout the day, showing a mix of uncertainty and cautious optimism. Earlier in pre-market trading, SoFi even dipped close to $25.10 a moment that would have rewarded any early buyer who was brave enough to step in during the initial wave of fear. Trading volume today has been noticeably light, and that's not just for SoFi. It's been true across the broader market. Around 40 million shares have changed hands compared to an average volume closer to 68 million. That's a sharp difference, and shows investors are being more selective ahead of the weekend. Importantly, there haven't been any new filings or announcements from SoFi's management today. No press releases, no fresh SEC updates. However, the company's CEO, Anthony Noto, did share something positive recently. SoFi has been ranked as the #1 robo-advisor by Barron's. That recognition is meaningful, even if it doesn't directly move the stock price immediately. It's a reflection of SoFi's strong standing in digital finance and wealth management. While the company doesn't emphasize its robo-advisor division heavily during earnings calls, this ranking adds another layer of credibility to its long-term growth story. SoFi could use this win to highlight its expanding ecosystem and diversified business model when it reports its next earnings results. Beyond SoFi-specific news, broader market conditions have been turbulent. There's been renewed tension between China and the U.S., leading to small bursts of volatility throughout the trading day. Statements from global policymakers have added fuel to short-term uncertainty, but the overall sentiment toward fintechs remains cautiously optimistic. Speaking of short sellers, it's interesting to note that short activity hasn't increased dramatically today. There's been a modest rise, roughly 46,000 new shares shorted, but that's not a major push. The total short interest stands near 9.5% of SoFi's available float, or about 111 million shares. That's a sizable figure, but it hasn't grown aggressively. The reason is simple. SoFi's price isn't close enough to the key $27 resistance level where shorts typically become more active. If the stock were pushing higher, we might have seen more aggressive short positioning, but for now, the bears are holding steady. Option flow data paints an interesting picture as well. Around $41 million in call options traded today compared to $13 million in puts. Despite the higher call volume, roughly 46% of all option contracts traded were bearish in sentiment. This represents a shift in recent weeks. SoFi's options market had leaned bullish regardless of broader conditions. The increase in bearish contracts could indicate short-term caution from traders heading into the weekend. Open interest levels show strong clusters around key price points: 8,000 contracts at $26, 7,000 at $25, 4,000 at $26.50, and 24,000 at $27. Historically, when these clusters build up, market makers often try to keep the stock pinned below the highest concentration, in this case, below $27, to ensure many contracts expire worthless. Given SoFi's current range around $26.60, it appears that's exactly what's happening now. When we analyze the secondary market, most of today's large transactions appear bearish in tone. That's an important signal because it suggests that while shorts are quiet, institutions are trimming positions, or at least not adding aggressively. A significant portion of SoFi's daily volume is being driven by algorithmic trading systems that react to short-term momentum rather than fundamentals. These algorithms are pushing fintechs like SoFi, PayPal, and Block higher in response to recent earnings optimism across the sector. However, algorithmic activity often causes misleading spikes, similar to what we saw last week when algos triggered a sharp pullback on Friday. Dark pool data, trades that occur away from public exchanges, shows limited activity today. The largest block trades were in the range of $1 million to $1.8 million each. That's relatively quiet compared to earlier sessions when dark pool volumes were much heavier. Hedge funds and short sellers are the main users of these venues, so the lack of movement indicates that large players are waiting for clearer market direction before making big bets. On the technical side, SoFi is once again finding support at its 50-day moving average, currently sitting around $26. This is the third successful test of this support level, a positive sign for technical traders. Typically, when a stock bounces multiple times from a key average like this, it forms what's known as a W pattern, often signaling an upcoming breakout. If this pattern holds, SoFi could push toward the $29-30 range in the near term. Of course, macroeconomic fears remain a limiting factor. Broader market volatility, interest rate concerns, and geopolitical tensions are all creating headwinds. But despite that, SoFi continues to show resilience. When you look at momentum indicators like the stochastic RSI, they show neutral readings, meaning the stock isn't overbought or oversold. That's usually a healthy sign that consolidation might be preparing for a larger move. Institutional trading trends also reveal something worth noting. Compared to the previous trading day, there are slightly more willing sellers around the $28 zone, while buyer interest has remained steady in the $26 range. That balance between accumulation and profit-taking is keeping SoFi's price action relatively stable despite uncertainty. All this leads to one central takeaway: SoFi is in a holding pattern, waiting for the next catalyst. The company's fundamentals remain strong, and optimism is building toward the upcoming earnings report. Current analyst estimates project earnings per share of 8 cents and total revenue near $895 million. Even more encouraging, in the last 90 days there have been 11 upward revisions to SoFi's EPS estimates and 0 downgrades. That's a powerful sign of confidence from Wall Street analysts. CEO Anthony Noto has hinted multiple times that upcoming results could be impressive. Member growth continues to expand rapidly, with over 1 million new members added in the most recent quarter. That kind of user growth fuels SoFi's entire ecosystem, from loans and savings to investments and credit cards, allowing the company to scale profitably. So what does all this mean for investors? In simple terms, SoFi is holding strong despite market noise. Shorts aren't increasing pressure. Institutions are rebalancing but not panicking. Algorithms are adding volatility, but underlying fundamentals are improving. The chart setup remains constructive. The sentiment among analysts is optimistic, and upcoming earnings could act as a major turning point for momentum. If you believe in SoFi's long-term vision, expanding digital banking, dominating fintech innovation, and growing its user base, then short-term fluctuations are opportunities, not threats. Buying dips near strong support levels has historically rewarded patient investors. With steady fundamentals, strong management, and increasing analyst confidence, SoFi continues to look like one of the more promising fintech plays heading into the next quarter. And while the market may stay choppy in the short run, remember, volatility is temporary, but execution is permanent. SoFi's track record, combined with its rising brand recognition and new accolades, suggests that patience could pay off handsomely in the months ahead. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.